What's going on, guys?
Not much, Fari.
Talk to me. Talk to me.
I got a quick question for you here, and
Yes, sir.
Dennis and I were talking. I know that you are a dedicated follower and trader of the S&P index futures. Wild day yesterday, cut a lot of people up. We are trading. Well,
Yes.
we were at 2038. We were 15 points over fair value. Now we know that between the cash and the futures, that has to be rectified within the first few minutes of trading. Do you have any particular strategies here, when you're getting open this much above fair value? Does it make you automatically want to short it, or perhaps let everyone short it, then you kind of look for a buy? Because we're way over fair value.
Yes, I realize that. Basically, I run by levels, okay? And as you know, Ethan writes a commentary overnight. Comes out about 9. I think it's already out. What time is it? Yeah, should be out. He runs the levels from a what we call volume profile point of view. There we go. It came in at 6:52, so about half an hour ago it got in. I run a table which I send you guys.
Yep.
I've actually been offering to share that with you guys. Beriano is well aware of it. Look, guys, if you want this table, I'll give it to you. What it is, and we post it at the end of the day on our blog. What that creates is, and we update at 9:30 Chicago time when the IB finishes. So we run by levels. The levels tell us what kind of day we have, okay, or what kind of intensity we have. That is, it measures us against the norm, which is like, for example, which support or resistance level we're on, okay, which one we held on going to the next level. As you know, it's like quantum physics. It's like electrons. Once they leave an orbit, they jump to the next orbit. There's nothing in between. That's how we get these burst moves sometimes. Have you noticed? Things are quiet, nothing is going on, and boom, 7 handles up. Well, then we get to the next level, and then we just sit there for a while. That's how we change those levels. Now, you have to superimpose them. You have weeklies, you got dailies, which are set on previous day move and previous week move, okay? So they're a little bit laggard, but the big guns will use that. So far, so good. The next one that's far more important to me is IB, what's called initial balance, because that takes into account how we trade the first hour. So what does that do? That includes overnight, because when we trade the first hour, already implied in that is that it knows where we opened, where we went to. So we update at 9:30 Chicago time. So that takes that. Plus, what else does it have? Economic news. It has the impact that the economic news give us, which usually comes, most of them, in first hour, or in case of, for example, non-farm, that's huge. That's pre-open, of course. But that takes care of what happened overnight and news, exogenous plus econ. We run by those. So for me to look at say I'm going to short it, I'm going to go long. I don't know. It all depends how it opens up, what those levels look like. And normally these days when I have interviews like today with you guys, I get all the data ready, and then we run that routine around like 8 o'clock. About 8:05, we send the emails out. So people have in our members team, members have that tables in front of them. We also give them charts that shows that graphically. So you have a table to tell you, and includes, by the way, what we closed last week. What are what was our contract all-time high? There's a lot of stats on it. What is crucial is not one given level. It's what's called confluence.
Gotcha.
Why is that?
Yep.
Because people trade on different time frame, as you all know. You may trade hourly. I may trade weekly. Dennis may trade daily. It all depends what kind of firepower we have. The more firepower you have to trade slower because you can't get in and out. The size is too big.
All right, Fari, you say you like to you say watch commander. Is that, explain that term and from your military experience?
It's at NORAD. That's what we do every day. We still do at NORAD. How do we bring peace to Canada and U.S.? Is it Cheyenne Mountain? You should give it a visit, young man. It's good for you.
All right, we got to get into specific stocks here because wow, earnings season.
All right, sir.
Dragging this market all over.
How did you like Apple?
I wasn't short it. And we didn't short the straddle either. Got a nice pop up 9.
Last time.
Yeah, up 9.15. What is Fari looking at in Apple today?
Well, we had 2 trades on. We actually took. You know what kind of hour it had before the close, right?
Crazy.
He got clobbered. We had 2 trade on ready, and around, I don't know what time we went out putting it out. I think it was like 12-ish or 1-ish. We'll start rolling it out, Chicago time. We bought a call spread and a put spread. Again, the call spread is doing very nicely. Thank you. We had a 117 target, and we're trading at 118. And you want to hit below where it's going to end at. Why? The parity equation. That's what I always talk about at SIBO when I teach about options. Keep thinking about parity. You got to put portion and a call portion in evaluation. And you want to do it short term. You don't want to go 4 or 5 months out. Why? Because if you're taking the call, the put side is not going to move much because it's got a lot of time left in it. So it gets tricky. Think about how the pros trade. Don't think retail, because retail will always get slaughtered. You know that. So what we do is we look at what the put side is going to be. Make sure it's a short term. I don't mean weekly. I don't like weekly. Weeklies are expensive. But the front month. Take the front month, and you want to be a little bit below what you think is going to end at. Okay. I didn't know it was going to end at 118, but I wasn't willing to go more than 117. So we bought 113, 117.
Ooh.
And we're looking pretty. Now, on the put side, we lost that. That's okay. But you remember what we did with the Twitter last year?
Well, yeah, I remember that. On the upside, right?
Okay. We waited and repaired that. We're going to wait and repair that leg too. So when you're not sure how this stock is going to trade, okay, best thing is to take both sides, but carefully, and give yourself a chance to repair the other side. I'll tell you why. Because that's how Murray wants it. Murray doesn't want to pay for anything. He doesn't get money back. So we put one for a winner and one for a repair, and we don't know which one it's going to be. Sit back, have some tea, and enjoy the ride.
Okay, Yahoo. Did you get down and dirty in that at all?
Yeah. No, we don't touch Yahoo. Yahoo, Yahoo is basically a very small company now. Ex-Bubba. So.
What about?
Yeah. I think this was it for Marisa. Marisa has done her vision. This is like Abraham. It's a deck of Abraham Lincoln in May 1st, 2003. It says mission accomplished. She's done.
Now I know you've made some good calls on Facebook. How about how you playing the Facebook here ahead of earnings?
I have no clue yet. I'm clueless. I'm technically blonde right now. Because it's too early. We'll take a look at it. We have FB today. We have, I believe, Qualcomm. Tomorrow is going to be. I'm trying to keep my emotional IQ, okay, or emotional capital for tomorrow, which is Google and Amazon. Tomorrow is a big daddy of them all.
Those
and also,
that's your
remember this
butter,
strategy.
Right?
Yes, sir. Google has always been. We put $300. We got back 11,000. Murray liked that. If Murray likes the trade, we're in.
Talk about Google.
Here's the thing. You put $200 and you got 11,000 back on Google before. Tell us how to do it this time.
300, not 200. 300.
300. Okay.
How did I do it? It was 300 Sigma channels. I keep on showing you guys Sigma channels. Send you guys charts. We took the Sigma channels way out, and everybody. And I thought I lost it. To be honest with you, lost it. It was a conference call that made it. The initial results out of the shoot, when Comedy Central reported it, a.k.a. CNBC, when they reported it, it wasn't there yet. I went to the gym. I said, heck, okay, we lost $300. Let's go and play some squash. And coming out of the gym, one of my assistants paging me, Fari, have you seen? He can't even type fast enough. Have you seen the conference call results? I said, I really don't know what you're talking about. He goes, Google. I think it's a big one. And we made it. So I get back to my screens and take a look and say, oh, geez, yeah. We have to exit. Now, we had to pay a few bucks to get out. As you all know from your experience on the SIBO floor and CME, when you win that big, do you think they're going to let you out that fast? No. You got to pay them a little bit. So, and we had, that one we had, that was a lotto. We had 1 day to go. That means that morning we had to get out. And we had to pay half a point to get out. I mean, the spread was 10 points. We sold at 9.5. We could not execute at 10. We tried. We're at 9.75. No feel. Fine. So, effort. 9.50, get out. Boom. Remember, here is our problem. It's size. I'm not just playing for myself.
Yeah,
I got everybody on the S50 options. When I pull that trigger, I gotta find that sweet spot, okay, in terms of profit, return, risk, and liquidity. As Gil Caffrey of Tiger reminds me, he says, when the liquidity light comes on as flashing, you better act, young man. And he's right. He knows. The guy trades $40 billion. Yeah.
I got to know how you're playing Google this time around. We sold off pretty good there yesterday. Are you playing this from the long side, short? So how are you playing it this time?
One of them I'll pick, most likely, but because the way it is and so expensive it is, Google. And remember, last time we did an Amazon last quarter, we're going to do strategy again. Any stock that's 3-digit and it's got a little bit of an unknown feature in it in terms of possibility, we'll probably trade both sides. I'm not into taking risk. I like to bet on a sure thing. Murray, I got to make some shekels.
Okay.
Sabbath is coming. Think about that. Okay.
Okay, all right.
So,
taking a look at
what do you guys think about Google? Don't you think Google is under pressure a little bit?
I do too. I've been looking at this saying the 500 to 540 trading range. Last time I got some puts off at the 540, covered them around 500. Did have the wherewithal to get long at the 500 area. Played a little bit short, got up there last time. I'm going to look for this thing to get back under 500. Until this thing breaks above 540, which you could obviously do on a great report, but I just think Twitter, Facebook, I think they're just losing a little. I mean, they're always going to be dominant in the advertising space, and people are still going to Google it. But I just think Twitter, Facebook, Apple, they're just going to eat into that market share a little bit. So I would not be long going ahead to earnings, but just for me, the stock's been trading in a nice range.
What about?
You know what I'll do, guys? I'll do this for you. I'll shoot you my Google trade because the moment it's ready for our team, for your eyes only, in real time. Then the next time we talk, you know exactly what we did. I'll show you also our exit if it turns out to be a winner. How's that?
Winner, chicken.
Fair enough.
That's what we like. Okay. Overall market thoughts here. I mean, kind of been in a wide trading range. I mean, we could just call it 2,000 to 2,050 in the SPOOs. We have dipped under 2,000 on a few times. We got a little excited over 2,050. I'm not sure where it's. I bet you are your Sigma channels starting to just kind of consolidate and really get tighter and tighter here.
Bravo.
So what?
Yes, sir. Bravo. Yes, they're coiling. So I think we are, as you know, volatility has its own cycles. Before they explode, they usually coil up. We're getting ready for a trade. A move. So far, CIs are showing softening at 0 line. So when the CI starts softening, I mean, it's coming up. It's coming up from negative territory, but it's beginning to soften at 0 line. Today's crucial. Obviously, Apple is a big thing, but we're only up over 5 handle. 5 handle is not going to move 2,000 scale. It's trading. It's a curve at 2,000, 30 scale. That's very low. I think so. I think most likely we're going to continue to coil, and then some event will come. If CI turns here, I'm not sure. Then the move is to the downside, and we're making lower highs. If you sit back, pull back from the chart and take a look at it, we're making lower highs. We should be pulling down, but we always have, what do you call it? Auntie Jeanette. She may come and say something. Be patient again. Drink more tea. See, she's listening to us. She says, drink more tea, be patient. So if that happens, we go back up again. I just think, I don't like to tell the market what to do. But if you look at also NDX, Sigma channels are very flat, beginning to coil. I think it's out there lost wandering around. It just doesn't have a conviction yet. But it's coiling, so something will come. Given the overseas news, you saw what I said on on my Sunday night report.
Okay.
I said, if any big EPS misses we'll have, we should stay short. I'm short with Time and Digest. Of course, you saw the results yesterday. Today, Apple is the first cavalry regiment, comes into rescue. But as we say in Persian, you don't have a spring with one bloom. So let's see what other one's going to do. Let's see what Google is. Let's see what FB is. Qualcomm is small. It's not a mover. But let's see Amazon is. And then we get light. I think after this week, the schedule gets lighter.
Yep.
It becomes more of exogenous news.
All right, we've been on the line with Fari Hamzei. He's the founder of Hamzei Analytics. He joins us every Wednesday, bringing his wealth of knowledge on aggressive equity options and index futures trading, and also his effervescent personality. Thanks for joining us. We'll talk to you again next week.
Always a pleasure and honor to be with both of you.
Thanks, Barry.